Stocks trade up with gaining stocks outnumbering losers by a fair bit. Nifty very close to its fresh all-time high. Gains across all sectors. There are some draggers though, like utilities and pharma, but all in all a good trading session so far.
The Reserve Bank of India doles out a record 2.11 lakh crore to the centre from FY24 from its surplus. The largesse amounts to 0.3 to 0.4% of GDP, and that can help the government trim its deficit or boost spending. Now, how will the government use this money? That remains the big question.
Sun Pharma slips after it guides for a single-digit growth in FY25. Lupin slides on new competition in a key drug, while HEG drops as margins crimp. Garden Reach Shipbuilders and PG Electroplast both jump on posting heady growth in both sales and profits.
Nvidia clocks an unimaginable 600% growth in profits and guides for a stronger quarter ahead than most expected. The $150 billion company in 2020 has now turned $2.5 trillion enterprise in 2024 and has now set its sights on the AI needs of the governments as its new growth frontier.
Good afternoon. You're watching us here on Halftime Report. It's an all-boys show. It's Mangalam Malu with Hormas Fatakia. Looking very good for the markets. In fact, in colloquial terms, what do you call it, Hormas? Within kissing distance of a fresh record high for the Nifty. Almost 40 points away right now. 150 point up move is what we're seeing on the Nifty. The good part is it is being led by the Nifty Bank, which is higher by 650 points. Hi, Hormas.
Mangalam, it's an all-boys show and it's a terrific Thursday, if you'd like to call that. It's the weekly expiry of the Nifty and it is within, as you said, touching distance of the record high, and it's almost there. But the heartening bit, as you just said, as the Nifty Bank, that is leading the gains, because the Nifty Bank has been a bit of a pain point over the last two trading sessions. They're struggling to sustain above that mark of 48,000, and it is doing so very convincingly now. There you can see the Nifty is now nearing 22,760 on the upside at the highest point of the day. Let's focus on some of the stocks that are on the move. There are plenty of them in the broader markets, and Gland Pharma is the first one. It's gaining over 4% following its fourth quarter results. The management has maintained its medium-term top-line guidance of mid-teen growth in the base business. Vivek is here with more details. Vivek, good afternoon.
Well, that's right. So Gland Pharma is the stock in focus, reacting quite positively. In fact, quite a mixed bag. That's how the street is actually reading this set of numbers. So first, let's have a look at what brokerages have had to say. Like you mentioned, Goldman Sachs has maintained a buy stance. They have a target price set at 1,975 rupees a share. What they're saying is that the good part is the management has gone ahead and maintained their medium-term top-line guidance of mid-teen growth as far as the base business is concerned. We'll come to the other business a little later on. Nomura has gone ahead and maintained its neutral stance. They've kept the target price at 1,517 rupees a share. They're saying that fourth quarter was a mixed bag. As far as the core business was concerned, it was strong. However, the CDMO business, that is Sensex, was quite weak in this particular quarter. What the management has said in the conference call is something that the street is taking quite a bit of confidence from. Management expects, the CDMO arm Sensex to get to high-teen EBITDA margin in the medium term, which according to them is in the next 2 years. What did they say as far as the con call was concerned? The legacy biz revenue run rate has improved sequentially. They're saying that the recently launched drug Halaven generic also should go ahead and aid revenues going forward. They're saying the EBITDA loss widened, while it widened to 72 crore versus 17 crore on a year-on-year basis. They're saying that no near-term pickup in Sensex, which is the clear concern. But at the same time, the guidance that they're given is something that the street is taking quite a bit of confidence from.
All right, so while the numbers weren't as heartening, the guidance is something that the street likes, and that explains why Gland Pharma is moving higher in today's trading session in an otherwise wobbly day for the pharmaceutical space in particular. But, we were talking about the markets on the whole and how the Nifty as well as the Nifty Bank are doing well. The advance decline ratio is still split right down the middle. So if you just take a look at, the number of stocks which are advancing and declining, those crisscross lines come up for you. They are pretty much embraced and in a bit of a lock with each other over the last hour or so. So now that we've spoken about a stock which is doing well, let's speak about a stock which is not doing well in today's trading session. That's HEG, tanking in trade after reporting a weak set of numbers. We spoke with the management as well. So let's get in our special Insight Edge segment with Nigel telling us the insight that he got from the conversation with the management.
Well, that's right. A couple of pieces of news playing out on HEG. First of all, the numbers were rather weak. If you look at it on the top line, there was a degrowth of close to 11%. EBITDA got hit far harder, and that meant that margins came down to single digits. And this is the lowest margins we've seen in the last 3 years or so. The power and fuel cost, and in spite of seeing a decline on the top line, the power and fuel cost was constant, telling you that that's the problem pocket for them. And the net profit number as well took a clonk. So that's the first part of the news, that the results were rather disappointing. The second part was they announced a scheme of arrangement. What was that? They announced that now in the time to come, you'll have 2 listed entities. One will be HEG Graphite and the other one will be HEG Green Tech. Keep in mind that this Green Tech entity, that's the one that will house the manufacturing of graphite anodes for the lithium cells. As of now, there's no revenue coming out of there, but that could be a driver going ahead. So that's why, they're saying that they're going to be rooming this business. As of now, 95% of their money comes in from graphite electrodes. So that's bulk of their business. How does the holding shape up post this scheme of arrangement? The promoters, they seem to be more bullish on the green tech business because they're doing a merger of, one entity into them, a couple of entities actually. And that's why their share goes up to around 70%. While in the current business, well, it stays at around 56%. That's the graphite electrode business. Now, we spoke to the management earlier today, and a few important highlights that they gave us. They're saying that the green tech business, they believe that could be a 1,000 crore EBITDA number in the next 3 years or so. We'll have to hold them on that number, but that's what they believe. On HEG graphite business, well, they gave us some important points. They said, yes, the margins were disappointing, but be ready for 2 more quarters of pain. The recovery will only be there in the second half of the year. And in volumes, they're talking about 75% capacity utilization on a capacity of around 1 lakh tons odd, which tells you that they'll be doing around 75,000 tons. And finally, they said that the cash balance as of now is around 1,000 crores. But 700 crores out of that will be used by HEG Green Tech. So put all this together, the numbers are a little disappointing. The path ahead, they believe that HEG Green Tech can deliver good numbers. But for the time being, the stock's under pressure. In fact, let's listen in to what the management had to tell us.
The margins continue to be under pressure, and I have said in the last interview also that it's still inching down, and the needle coke prices are also coming down with a lag. So that is why the margin is under pressure and it's likely to remain so for next 2 more quarters, it seems. For the last, since we declared the expansion in November 23, it's only the last quarter of Jan to March that we got this capacity. So on that capacity, our total utilization was in excess of 80, between 80 and 85. Going forward for 24-25, we expect to be around 75% of the new capacity of 100,000 tons.
When the capacity utilization will go till 75%, the EBITDA will be approximately 350 crores from that. So you can expect they could be 1,000 crores of EBITDA coming from this green tech company in next 2-3 years. We are sitting with 1,000 crore of cash, of which roughly 700 crores will be utilized for this TACC business.
The stock has taken it on the chin today, has HEG 9% lower now as we speak. Time for a short break here on Halftime Report. Up next, we get you an exclusive conversation lined up with Kamlesh Goyal, the founder and chairman of Go Digit Insurance. He discusses the company's D Street debut. Stay tuned, back on the other side. That was our halftime report, and let's focus on the new kid on the block now. And shares of Go Digit listed at 286 rupees a share compared to its issue price of 272. It was a subdued listing so far, but the stock has picked up after that, almost 12% higher now from its issue price. My colleague Yash Jain spoke to Kamlesh Goyal, the founder and chairman of the company, and began by asking him about the potential premium growth trajectory for Go Digit Insurance. Listen in to a slice of that conversation.
We as a company don't really work on the basis of some guidance or something like that. I think we by nature look for opportunities as they arise. It could be in any new product, it could be an existing product or a new channel. And that is how I think we look at business. And this listing is a huge milestone, but I think we work business for the long term, and that is exactly what we will do. Life and business is never a straight line. It's more like a roller coaster ride. I think we'll hit some highs, we'll hit some lows. But we will do what is really good in the long term for the company to the best of our ability. I think today on a listing day, that's one assurance I can give on behalf of myself as well as Digit to all our investors, and really thank them for their confidence. I think incorporating the company and getting listed in just about 7 years, somebody was telling me in the morning today that it seems to be like a first company to have achieved that. We are really thankful to God and all our customers and partners. But life will go on, huge milestone, but I think the journey continues.
Okay. I won't press you on the exact numbers, but sir, the industry has been growing at about 18%, 19%. You've been growing twice of that, at least if we take the recent numbers. Just wanted to ask you, could that kind of outperformance continue for the next few years to come?
Yes, I think, as I said, we don't give any guidance. We honestly don't know. And as I said, we look at things slightly more from a long-term perspective. If we see opportunity to grow significantly faster, we will. If we don't see opportunity to significantly grow, that's it. But we will do or run business what we think economically makes sense. And I know pressures of stock market and guidance all is there, but we just don't do that at all, yes.
Okay. So it's a 7-year-old company, as you also mentioned. There is a lot of investment when it comes to distribution in terms of digital infrastructure because, of course, it's digital native in that sense. Could the underwriting losses, at least for a few more years, continue because investments could be higher? And how soon do you expect to reach that break-even point as far as underwriting level is concerned?
I think both of us will have to go to an astrologer for these answers. As I said, we don't believe in doing any forward guidance. And being listed today, I think it's a promise I've made to myself. I'm not going to violate that today or going forward. I wouldn't want to comment on any of that because, as I said, 7 years back, somebody would have told me that in 7 years, as we are starting issuing our first policy, and we'll actually get listed. Not even 7 years. We issued our first policy in October. 6.5 years we'll get listed. I wouldn't have believed it.
Correct.
So life is, I think, full of surprises and also some unpleasant surprises. I think we're prepared for both. And in the long term, I'm sure our country will do well. Companies will do well who really think long term. And that's where we see Digit to be.
Last couple of questions, sir. Motor right now contributes 60%. Non-motor contributes 40%. A lot of analysts see that as a risk because if something goes wrong in motor on the pricing or on the industry, it could take a bigger impact on the company. Do you see more diversification coming onto the product portfolio, moving a little away from motor and entering other segments like health and so on and so forth? And what is the ideal product mix that you would aspire to have in that sense?
So, Yash, I think in all my investor meetings and analyst meet, I say I've been in insurance for 36 years, worked in many countries. In my understanding, there's no ideal product mix. In my understanding, there's no ideal channel mix. What is profitable today might not be profitable tomorrow. What is unprofitable today might be profitable tomorrow. So we don't believe in having any of this. If motor offers more opportunity, we become 95% motor again, we won't mind. If motor is not offering opportunity from 60, if we go down to 20, we won't mind. Because all this will depend upon the opportunities we see in the market. And that's the message I think I've been also conveying.
Okay. On the geographical distribution side, about more than 55% of the revenue comes from 3 states. God forbid if there is a large catastrophe incident in any of these states, it could have a bigger impact on the company. In terms of your increasing geographical reach, the next 2 to 3 years, how do you see that panning out?
I think in geographical reach, the only comment I'll make is that you could have some very large industrial business groups who have assets all over India. Say somebody is in solar, a power plant, and they have assets all over India, but their head office is in Mumbai, or somebody's head office is in another state. And all the business of all the assets which are there gets booked in one particular state. So I think this geographical spread to a large extent comes out of this. It's not really that the assets are also allocated or located only in this top 3 states. That's the only thing I have understood about this business, and that's the answer I can give you, Yash.
One big trigger for motor is going to be, the freeing up of motor third-party rates, which continue to remain regulated. If that happens, you have 60% of your portfolio coming from motor. How much would it help a company which has a high concentration on motor and is growing at a very strong pace?
I think as a company, we believe in freedom in pricing, freedom in product design. So anything regulator can do to make this pricing freer is more than welcome. I think a bigger challenge for the industry is that in the last 4 years, we have only seen price increase in one. So while the Motor Vehicle Act itself provides for minimum compensation going up by 5%, I know there is inflation. So I think, in my personal view, I feel that time has come either regulator to really look at the pricing seriously, or if they have any compulsions, just to make it free pricing and let the market decide. But having in this situation where you are controlled but the pricings are not increasing, I think it's a slightly difficult place to be in.
Right, interesting conversation coming in from the management of Go-Digit. Recent listing opened slightly subdued and thereafter has kept its pace up and now up around 13% from its issue price. The stock at close to around 307 rupees. What we'll do is take a short break, come back on the other side. We'll speak about another big mover, albeit not in India. It's Nvidia, which has clocked in an unimaginable 600% growth in profits and guides for even a stronger quarter, much more than what most expected.
Back on halftime report and on to some action from the US. And AI favorite Nvidia reported strong first quarter results, actually very strong first quarter results. The company is guided for a revenue of $28 billion in the second quarter. The stock has crossed the $1,000 mark after a 6% gain in extended trading and is now the third most valuable company in terms of market cap. Rima is here with more. Rima, over to you.
Thanks so much for that, right? What a blowout quarter it's been for Nvidia, cementing its place as a tech powerhouse and a leader of the AI chip revolution. Now look at those numbers. The company has reported a revenue jump of 268% and a profit jump which surpasses 600%, beating even lofty estimates. With this kind of a performance, yesterday in after-hours trading, the stock surged 6% and finally crossed that 1,000 rupee mark for the first time ever, taking its market capitalization to $2.5 trillion. In fact, the market capitalization of Nvidia has surged almost 4 times since January of 2023. We're talking 18 months ago. And if you go back in time, its market capitalization was a mere $150 billion in January of 2020. This is nothing short of absolutely stunning, miraculous. And with this swelling of market capitalization, Nvidia is the third most valuable publicly traded company after Apple and Microsoft. And to give you another stunning statistic, Nvidia's market capitalization, if you consider the after-hour close and its market cap at $2.5 trillion, is more than that of Tesla and Amazon combined. Well, what's driving it up are real hard numbers. Its revenues rose quarter after quarter by close to about 18%. And as we said, on a year-on-year basis, it was up 260%. Its 3-year revenue compounded annual growth rate, the 3-year CAGR, stands at a whopping 66.2%. Its gross margins are 78%. Its operating margins are 65%. And its EPS, if you look at that EPS, it's exploded from a mere $1 for so many of the preceding quarters. In the latest quarter, it stands at over $6. Its dividend has increased by 150%. And not just that, the company has also announced a stock split of 10:1. And to top it all up, its Q2 guidance has also topped lofty expectation at $28 billion. So it's no wonder that 90% of the analysts who track Nvidia have a buy call on it. And the highest target price on the street is by HSBC at 1,350. And here's also something interesting which caught my eye, which came out from the earnings call. The company told analysts about a new area that's rapidly growing as an opportunity for the company, sovereign AI, which basically means that many nations around the world are building up their own domestic computing capacity as data privacy concerns come into focus, and this is contributing to increasing demand for Nvidia's product. Now, sovereign AI is emerging as a growth driver. In fact, one of the examples shared by the CFO in the call was that Swiss.com, which is majority owned by the Swiss government, has recently announced that its Italian subsidiary will build Italy's first and most powerful Nvidia-powered supercomputer to develop the first LLM, large language model, natively trained in the Italian language. And this perhaps, this sovereign AI, could take place and, capture many of the other countries as well. So the CFO said, the importance of AI has caught the attention of every nation. So from nothing in the previous year, they believe sovereign AI revenue can now approach high single-digit billions this year. Back to you.
All right, so that's the big move that we've seen on Nvidia. Blowout quarter, but the last few quarters have been blowout, and the big move that we've seen in the stock price, as Rima pointed out. Thanks a lot for interesting nuggets out there, Rima. Take a short break, come back. We get you the management of Sun Pharma on their Q4 earnings, the top Nifty loser today. Stay tuned for that.
Back with us on halftime report, and the markets continue to do well. The Nifty continues to remain around 22,750, but there are plenty of movers in the broader markets. Pull up Bharat Dynamics, and that stock is up another 6% today, and it is up for the 8th straight day, Mangalam. It's up 50% in the last 8 trading sessions. Is Bharat Dynamics. It's closing in on the 3,000 rupee mark now. The IPO price was 430.
Don't lose sight of the fact that we're now just around 15 points away from a fresh record high on the Nifty, 22,782 as we speak. In fact, less than 10 points away. So that, the counter may perhaps come up for you right now. It's less than 10 points away from a record high for the Nifty. So what we'll do is actually we'll go across to the management of Sun Pharma, the top Nifty loser, speak about their growth plans going forward, and perhaps when we come back, we may have the Nifty closer to a fresh record high. Let's hear out the management of Sun Pharma.
So our revenue guidance of high single-digit growth of FY25 is based on all the businesses which are poised for growth. As far as the EBITDA margin guidance, we have not been given guidance on EBITDA for last couple of years at this point of time.
Okay, sir. So, just a follow-up question. Do you think that the high single-digit revenue growth that you're seeing, you think you're being a little conservative at the start of the year? Maybe you could go ahead and outpace that as far as the second half is concerned. And a follow-on question, you're expecting R&D spends to be quite high, especially when you're comparing it to FY24, almost 8 to 10% of the total sales. So where is the incremental spend going? Is it mostly going towards the specialty portfolio?
See, our guidance for FY25 on the revenue side factors in all the known factors and the business-related growth positions. With regard to the R&D spend, you will observe that it has been steadily increasing through the year, supported by incremental specialty R&D spend. In the current year, you have seen that FY24 overall R&D spend is about $380 million plus. Substantially increase from 26% to 39% overall increases happen in specialty R&D. In future, we are expected to start more trials as our pipeline, and major part of R&D increase will be towards the specialty, and that's one of the factors why we are given the guidance of R&D spend between 8 to 10% of the revenue for FY25.
Thank you for that clarification, Mr. Murali. See, the other question that we have is especially when it comes to the US-based business. So do you expect further pricing pressure, or has there been an abatement as far as generic price erosion is concerned?
Yeah, as far as the US generics pricing environment is concerned, we always maintain it continues to remain competitive, and pricing is a function that's product specific.
Okay, sir. And now coming to the specialty products portfolio, by when are you looking to launch the specialty product for alopecia, FY25? Could you give us a more specific guidance for the launch timeline?
So we have maintained that we are on track for approval, post-approval launch. However, you should also factor in certain time for the pre-launch activities, which is very customary for an innovative product before launch.
So going forward, what is your guidance on growth in the specialty business in FY25? Do you expect products like Winlevi to further ramp up? And based on what we've seen in terms of sales, both on a quarterly basis as well as on an annual basis?
So I'd just like to give a context in terms of the global specialty business. For the full year, we surpassed $1 billion with a growth of about 19% plus over the previous year. And Sun Pharma is the only Indian pharma company with a substantial innovative business. The contribution from specialty business have grown from 7% in FY18 to 18% FY24. And the business continues to grow at a healthy rate which is about 19% in the current year. And our flagship product, Illumia, which is the revenues about $580 million FY24, also grew a healthy rate of 21.7% over the previous year. When you look at the specialty business growth in the coming years, we strongly believe that our key products and specialty is in the growth path. This will be supported by the new product launches, which is in the pipeline. We are also expanding our global specialty product portfolio to the geographical footprint across various other opportunities available. And there, as a result, as mentioned, the specialty business contribution to the consolidated group revenues will continue to inch up and increase.
All right, so that was the management of Sun Pharma. But like we pointed out, while the conversation was underway, the Nifty has gone ahead and hit a fresh record high. Not just that, also hit the 22,800 mark for the first time ever. What marks the moment of celebration? Why do I say that? Because in the very recent past, we saw the Nifty go all the way up to 21,800. So from those levels, it's a near 1,000-point up move that we've seen. And not only has the Nifty moved higher, it's been led higher by one of its biggest underperformers, which is the Nifty Bank. So the Nifty Bank is doing well, up around 700 points. HDFC Bank is doing well. We've seen a big traction come by in all the other contributors as well for the Nifty. Case in point, something like an L&T, which has moved to the high point of trade with a gain of almost 3%. Infosys, we had the management, Salil Parekh, join us for a mega CNBC-TV18 exclusive. A decent weight on the index there as well, up around 1.5%. And Reliance, that too continues to do well. Steady 0.5% gainer since the morning itself. So no real draggers for the Nifty. The ones which are underperforming are the pharmaceutical stocks, which actually do not have as much weight on the index as well. So in cricketing terms, we can say all the top performers of the Nifty going out and getting great starts.
Absolutely, in good form as well, right? Returning to form, if I can say that, because HDFC Bank has been one of the underperformers for the Nifty for most parts of this year. And all of them, Axis Bank, ICICI, HDFC, SBI, 4 among the top 5 contributors on the Nifty are the banking stocks. You can pull up the contributors list as well, and you will get a fair idea of how the banking stocks are leading this charge on the Nifty today, on the weekly expiry day as well. So that is a decisive move on the Nifty that we are seeing courtesy the banking stocks. We'll get some more reactions going as well on this record high. There you can see that the Nifty Bank now heading towards 48,500, which is a bit of a resistance level as it was pointed out earlier. So some banking stocks leading the charge and the Nifty Bank heading towards 48,500.
Right, so let's welcome Gautam Shah of Goldilocks Premium Research joining in. Gautam, you've been fairly, bullish on the way forward for the market. We're closer to 22,800 now, a near 1,000-point rally from earlier lows. I remember you saying that if we don't close below 22,000 for a very long time, there could be a case for an up move. How much more could the up move be for those who would have missed out on the 1,000-point rally?
Hi, Magnam. Thanks for having me. Well, I think with what markets have done in the last 7 days, it's pretty clear what the market feels about the event ahead. And with the participation being as good as it can get, momentum being extremely strong, and in some sense, this new lifetime highs is without any major participation of 3 big heavyweights, which is Reliance, HDFC Bank, and the IT space. So it just tells you that the rally has been quite broadened out. And if these 3 pockets were to start doing well, which is my view, I think we are going to build up on the gain. So as we get into the event, I don't think there is a case for major excitement or major disappointment. I think the market trend continues to be positive. We have our own local, tailwinds that are going our way. So I think we will see higher levels. Just stick to quality stocks. Do not overanalyze and just tag along. I think that's really the key takeaway.
Gautam, good afternoon. Thanks a lot for joining in. You last spoken to us last month and you had mentioned that a close above 22,800 would trigger a very sharp 5 to 6% move on the Nifty. Do you stick to that stance? You see levels of 23,000 and above very soon now?
See, if you look at the last 4 months, we've oscillated in the 1,000-point band of 21,800 to 22,800. There have been 3 or 4 attempts to break out, which did not work out. There were 3 or 4 attempts to break down, which did not work out. And as I highlighted earlier, this is typical consolidation after the kind of runaway rally that we saw later last year. But now I think you have just too many positives coming together with the elections and global markets doing well, China factor coming back, liquidity being very, very strong, and obviously the entire momentum of the market and the confidence of people. So keeping all of these factors in mind and obviously looking at the chart, I believe that this time we will definitely get past 22,800. And if it does happen, you could see a 5 to 700 point kind of a rally. It's not very large in percentage terms, but I think the real opportunity is still in the broader markets where one should be committed into.
Well, broader markets, as we speak, all through today's trading session, they were slight backbenchers in today's trading session. In fact, the mid-cap index is up just about 0.5%, even as the frontline indices are well above 1%, for the Nifty Bank above 1.5%. And you have the market breadth, which is still at an even keel, an equal number of stocks which are advancing and declining. Gautam, you did point out that the three heavyweights of the market have not done well so far in this rally. What also has happened is that this rally has happened despite the FIs selling in both the cash market, them having near record short positions in index futures, and the India VIX rising because of the event as well. So there are a lot of conflicting factors for the market. Despite the counterweight on the other side, the Nifty is moved higher. What happens when this starts to unwind? Will that be more than the 5 to 7% that you've spoken about? Or could there be a case of a bit of a melt up as well?
See, Mangalam, there are a couple of points that people need to understand. I think historically, I have seen 4 elections, while being at the market. And every single time, 1 month before the election, you see a large rise in VIX. Because there are people in the market, there are large institutions, large corporates who want to hedge their portfolios. And that's probably the reason, VIX has gone up. It's almost like an insurance that a lot of people have taken against their long side portfolio. So don't read too much into the FI, short positions that are there in the market. It seems more from a hedge perspective. But having said that, I think India VIX is now approaching a very important resistance in the form of 23 and then eventually 27. Historically, we've seen in the last 20 years that whenever we get into that band, VIX stops out and then we see a cool off. So what I see post June 4th is that the market is going to go back in a huddle in some sense, and we start looking at global markets for triggers. And I think FI selling has really not been a trigger, because if I compare today's bull market to what happened in the past, I think domestic liquidity has completely taken over. And I think this overshadowing is going to continue for months and months to come. So I think things are only going to get better, and we are not richly valued as yet. So I think if you put in all of this in context, the trajectory is up. Magnitude is still questionable.
One final question from my end, Gautam. By the way, just as we speak, the Nifty has made a new high of 22,837 now. Within just a few minutes, a 40-point move on the Nifty. But Gautam, since you were mentioning stick to quality stocks, I was just looking at the top gainers on the Nifty from the 3rd of May, which was the last instance when the Nifty made a record high. It's auto and FMCG are the prominent names, as you can see there. Britannia, Hero, Mahindra and Mahindra. Where among these do you find value, or is there any other sector that you find value now that the market is at a record high?
See, number one, this has become a value market. I mean, the concept of buying growth stocks at any price, I think, has not worked in the last 3 years. It's pretty clear. The market has shown us that in the last few years. And even now, the market is hunting for value. So I think the way I see it over the next 6 months, I think the value is in FMCG. Because it's a sector which has done nothing for the last 6 to 8 months. These are super quality companies. The management commentary is very, very good. And the charts are very well placed. So I'm actually betting for the FMCG index to move towards 50,000. So all the top stocks led by ITC and HUL should do well. This is followed by pharma, which we continue to like. And metals, every time I've been on your channel, I've spoken about it. And I think the best for metals is yet to come. So stay committed in just about every name in the metal space.
All right, FMCG, pharma and metals are the spaces to be in right now. Pharma's on the dip in today's trading session. Metals also a bit on the back foot. But from a long-term standpoint, rather the medium-term standpoint, Gautam believes that the next up move would be led by these three sectors itself. Gautam, always a pleasure speaking with you. Thank you so much for joining in. Congratulations to all the participants for a fresh high on the Nifty. Once again, 22,826 is where we are at. And as we're speaking about the Nifty itself, important to know that it's also a Thursday, which means it's a Nifty weekly options expiry. And ahead of that, if you just keep an eye out on the key indices today, the Nifty Bank has done extremely well. In yesterday's trading session, the FI has actually sold about 1,200 crores in Nifty Bank futures and bought about 600 crores in Nifty futures. So they were shorting the Nifty Bank, and that's where a lot of unwinding is taking place. The Nifty has done well, a record high for the mid-cap index as well, even if it is underperforming the frontline index in terms of the absolute gains that it is seeing today. The Nifty Bank yesterday closed exactly at the 50-day moving average, and from there it's moved forward and it's conquered the 20-day moving average. The key to watch out for now will be what HDFC Bank does. We've heard about HDFC Bank from Gautam, etc. But HDFC Bank has a very strong congestion between 1480 to 1500. Why do I say that? Because around 1485 and 1482, we have both the 20 and the 50-day moving averages. And at 1500, we have the 200-day moving average. Can the HDFC Bank stock cross past this crucial juncture? If it does so, then maybe we would see further up move on all the frontline indices. Just from an expiry standpoint, there was a lot of writing right from the word go at the 22,700 put on the Nifty and the 22,600 put, and also a lot of punt buying at the 23,000 call. That punt buying seemed like it was, perhaps done for the Nifty to cross the record high, and once it did cross the record high, maybe the street would see a bit of a melt up out there. So that's why we've seen a big up move in the premium of the 23,000 call as well at around 1.5 rupee a pop this morning. That's turned into 4.5 rupees itself. We have to look at the shorts that we're seeing in a couple of these pharma names. Sun Pharma and Lupin really stand out, and which is where a lot of short positions are being added. But otherwise, the kind of up move that we're seeing in the market seems like may perhaps move a lot higher by virtue of short covering in both the Nifty Bank and a lot of the punt buying that we've seen at the 23,000 call.
A pretty confident commentary from Gautam as well, right? The best of the metals is yet to come, considering the rally that we've seen in most of these names like Hindustan Zinc and Vedanta and the likes. But good time to get a technical check in the market as well. Aditya Agarwala of Invest for Edu is joining in this afternoon. Aditya, good afternoon. It's a record high for the Nifty. 22,800 was a barrier. Now that it is crossed, 23,000, 23,200, what's the next levels you're watching out for?
Good afternoon. Thanks for having the show. Clearly, it's a day of celebration if you're a bull, and especially about 7-8 days back, markets were languishing around 22,000, and people were talking about a breakdown from 21,800. Now we're back at all-time highs. Definitely, there is momentum in the markets. We can scale past 23,000 on the upside, and 23,150 is what I'm eyeing for on the Nifty, and this could be a sharp one considering the kind of breakout that we are seeing in trade today. And clearly, I was listening to Gautam as well, and I think metal and bank will lead this rally. The setup of the metal index is clearly showing traction on the upside, and there is enormous bullishness in the entire metal pack. So I think banking too, after this sharp up move in today's trading session, should see a decent upside on the Bank Nifty, closer to about 49,500 to about 50,000 on the Bank Nifty can be seen. We are still some distance away from the all-time high on the Bank Nifty, so it has to move in that direction for the Nifty to scale past 23,000 as well. Having said that, one should not lose sight of the fact that the VIX is also spiking up, and it will spike to levels of 30 as we come closer to the outcome, which is the usual case every election time. So keep an eye on that, because with this sharp up move, you can have bouts of profit taking as well. So don't be blindsided and just be super bullish. Yes, there is bullishness, and markets will scale closer to about 23,000. It's just about 150 to 200 points away.
All right, Aditya, thank you so much for joining in on this occasion and giving us a sense of where the market is likely to head from here on itself. It's a short conversation, but we'll continue it for another time, because we're also joined by Devina Mehra, who's the chairperson of First Global, joining in on the phone line. Devina, thank you so much for joining in. We've heard a bunch of bullish commentary that has come in, and it's also at these times where we need to, also not lose sense of perspective. Now that the up move has happened on the markets, where do you see the risks emanating from, and what kind of sectors would you still back despite the rally that we've seen?
Hi, I'm outside, so I can't see your screen, but I bet you have confetti and balloons and so on. But coming back to the market view, my view has been kind of twofold on two fronts. One is the medium-term outlook, where I remain positive, and one is like a 1-2 month volatility possibility, where there is still a possibility of some volatility. So as far as our PMS is concerned, we have hedged ourselves because we always err on the side of caution in case there is a big move, down move at any point. But since we remain positive on a 1-2 year basis, we are fully invested, so we are not in cash because you can't afford to miss out on an up move also. So that's broadly been the case. The other part, which I have been warning about for some time, has been the frothy end of the market. So we have largely steered clear of companies with, let's say, less than 5,000 crore market cap. So that's been the strategy, so as not to get caught out in those kind of areas, because a lot of new investors don't remember how much small caps can fall. The whole index fell almost 80% in 2008-9, fell almost two-thirds in 2018-19. So that's been the broad strategy. In terms of sectors, one sector which I've been speaking about for a long time has been capital goods and industrial machinery, where we've been overweight since October 2021. Most people sort of discovered it about a year ago. But the question now we ask is whether the run is over. We have cut back, but we are still overweight. Where we have been overweight last year and a half has been auto components, pharmaceuticals, some construction. So that still continues even after our rebalance in April. Where we have added in the last month and a half has been metal. So that's broadly in terms of sectoral themes that we are playing.
You know, Devina, we may not be having confetti and balloons right now, but the ones who would surely be having that are the ones who invested in PSUs since last year. What's your call there? Is there more upside left for the PSUs going forward, considering the election outcome and the hopes of continuing of the same government going forward?
PSUs actually, I mean, there are many diverse things in there. So right from the manufacturing companies to the banks to, let's say, the oil companies and all that. So I don't like to talk of it as one big lumpy thing, because our decisions are fairly sectoral and fairly company by company. As far as the election outcome is concerned, I don't think, that should be an overhang on PSUs, logically speaking, because not many of your viewers may remember, they may be too young to remember, but 20 years ago there was a big electoral upset when the NDA government actually advanced the elections by 6 months because they were so confident of winning, and then it was an absolute shock decision where most of the cabinet also lost their seats, and as you know, the market was circuit down, trading was halted, but the market forgot it in like a week's time, and that 1 year was among the best years in the market history. So I think we spend too much time thinking about elections and politics. The market has a logic of its own.
Take that point. Always good to hear the voice of reason and get a sense of perspective. Thanks a lot, Devina, for joining in, bringing us up to speed with all that has happened in the past and reminding viewers that equities, no matter the kind of move that we've seen on the upside, is still a risk asset. So better to err on the side of caution itself. Always a pleasure listening to you, even more so when the markets are moving the way they are. 22,830 on the Nifty. What we'll do is we'll take your leave on the equity part of the show right now. Come back on the other side. Manisha Gupta joins in with all things commodities.
Welcome back, and joining us on the show now is Peter McGuire. He's CEO, Exim Australia. Peter, hi, good to have you. And while the Indian equity markets are making higher highs, we have seen commodity markets actually see a bit of a pause. We're looking at some healthy profit taking, if I can call it that. But I do want to start with metals as a sector, where we've seen copper prices come off quite sharply, almost 3% off from the kind of all-time highs that we saw it touch within this week itself. How are you looking at the US Fed meeting minutes yesterday and its impact on overall commodities as a sector?
Well, good afternoon, Manisha. Congratulations on the Nifty. And I tell you what, it's very, very exciting to look at it from, Australian lens. If I look at the base metals, and yes, I think they were exhausted to the upside. They were very, very strongly bid up over the last couple of weeks when you're looking at what you've seen as far as copper, nickel, lead, zinc, tin, all of them really, really strongly bid up. And they've just given up some of those gains. And where I look at the minutes, and as far as the Fed's concerned, it's still waiting to see. There's no real action plan in the sense of when we're going to see rate cuts. I think we're just sitting here from a timeline perspective. September's pretty much the thought in mind. And are we going to get, another rate cut later in the year, or is one going to be it before the election? So there's a lot of water to pass under the bridge between now and then, Manisha.
So at these current levels, what's your sense, Peter? Would you say some consolidation is on cards right now, or are these buying opportunities?
I think I wouldn't be surprised for a little bit further softness, and then I think they'll bounce again to the upside. So like anything, they give up those gains. I noticed you're looking at the best part, aluminium 3% and a bit down, zinc 2% and a bit, copper was really spanked hard. So yeah, look, it's not unusual to see those big wipeouts, but it's just a time of, the bears were in, it was probably very short-term trading. And that's where you've got to trade that market. You've got to be mindful that, you can't take your eye away from the wheel.
No, you can't do that. Well, yes, yesterday was a 1.3% of a decline in the New York session, and the Asian markets are down 1% and more right now. So there is this follow-up sell-through that we have seen happen in the second time zone as well right now. And it's not just about the base metal prices, Peter, because gold has gone down. Silver as well has given up huge amount of gains. How would you look at silver to begin with?
Well, I think that's probably a good time to buy, Manisha. It really shot to the upside, through $32 odd on the COMEX. So I think that probably at current levels, it's showing a good opportunity. I still feel as though that the best time is going to be ahead of it over the 2024 window. So as we roll into election time and plenty of other concerns as far as dollar and equity markets and so on, I think the flight to safety is going to be one of gold and its little brother will be the place to be. And it might be a time to buy at the moment.
So when for the base metal prices, Peter, when you say that there is some more correction on the downside that could be remaining, so approximately what percentage on the downside are you anticipating?
Oh, I think a couple more percent, Manisha. I wouldn't be surprised, to let it, let a bit of more hot air out of it. It'll bounce, but it's normally, you see that sort of move when it's so strongly bid up. It can wipe out, 5 or 6%, and then it just gets a floor and then takes a deep breath and then off it goes again to the upside. So it's not unusual. It could be a point in time that it's going to be choppy. But the time to be in the market was probably over the last couple of months. It's shown incredible uptick. And but I think there's certainly more upside than downside.
All right. One final question then, Peter, and this is about the crude oil prices. Most of the oil marketing companies in India are doing well, and that is because the crude oil prices have corrected quite a bit in the last 2 or 3 sessions. Are you looking at more correction? Do you see 80 giveaway for Brent?
Well, you run at about 81.50, 81.60 at the moment, Manisha. I wouldn't be surprised to take it another little bit down. It'll find support, I think, around that $80.50 sort of mark. And until we get some sort of clear indication as far as geopolitical or something else to drive the markets higher, I think it'll consolidate at this sort of number at the moment. But keep an eye also on US dollar index.
Well, yes, that is one thing to watch out for. The dollar index as of now just about holding below that 105. And that is one of the reasons that you have seen this pressure come in for many of these dollar-denominated commodities. But as always, Peter, thank you so much for joining us and making sense of what really is happening in the international commodity prices there. But with that, that's all the time that we have on Halftime Report. Business Lunch will take all the action forward.